Ethereum and Aussie-Yen. Okay, okay. So I had a decent week as well.
I don't know what that means.
Wait,
If you like, I can search the web.
wait,
What would you like to search for?
wait, my Siri just popped up. Okay. How about the rest of you? How's your performance in L? So Josh down to R, um, one lost on Dollar Cat and one on Kiwi Dollar. Yep. Josh, can you send your chart into the chat? So Ruhui say one break even. Yong say one break is break even as well. Oh, seems like not many of you caught the melt on the yens. How about Aussie dollar? Aussie dollar was also another 3R plus for myself, and I think some of you also caught Aussie dollar, right? None of you caught Aussie dollar. That was very clean short as well. If we go into Aussie dollar, that was a very clean, a really clean TPF as well. None of you caught that Aussie dollar short. I think I'm not sure if Peter is here. One of our members actually called that AU short. Sorry, give me a second before we start the break. Can you before I get started, can you all hear me well? And is the chart all okay? Because I'm using my laptop today, not my usual setup. I'm outside right now. Yeah, all good. Yeah. Yeah. Okay. So let's start the meeting. So this upcoming week will be having some news, but very little. We got Aussie bank holiday. Tuesday, no news. Wednesday, we got Kiwi cash rate, so be careful on that. Thursday, we got FOMC meeting. Main is that's not the main one, so not too concerned about it. Normally, we wouldn't have much impact. Core CPI is the one where we might see some we see some volume spike. Then on Friday, we got pound GDP, high impact, Canadian unemployment rate. Move to the chart. So just a recap of the entire week. It was pretty decent. I caught Aussie-Yen short, but very unfortunately, I know some of you didn't catch it. I was fortunate that um let's let me do a quick recap. So that's the entire um yeah, that's the entire thing this week. So we took multiple positions on Aussie-Yen. The first one being a loss. Why did I take a short there? If you look at the 16-hour chart, you can actually see that. Let me zoom out a little bit on the daily. So on the daily chart, you can actually see there's a key level here at 98. Just call it 98.50. So on Monday, when I saw that price was attempting to break this 98.50, especially on this candle, I actually got faked out on that candle. We can call it I got faked out because if you put on a replay, and you drop down to the 15-minute. I was looking at I was waiting for some confirmation break under the area. And after seeing price aggressively trying to break under the area, that's when I actually hopped onto the sell. But unfortunately, there's no follow through on Aussie-Yen. It was quite an ugly short, very straightforward. It was a straightforward loss. Price eventually went back up. And there goes the second trade of the week, which also was a Aussie-Yen re-entry. For this, I actually aggressively entered at the high because I identified that market has a potential to create a fake out above this area. And plus, if you look at the 4 hour, the overall direction on Aussie-Yen was overall still bearish, right? It was overall bearish. And I believe that sellers are still in control because of these massive sells to the downside. And we got some follow through here, and we got some follow through here. So this bearish impulse, this area here, was technically what has confirmed that, hey, I believe sellers are still in control. So taking a loss there for me is fine. So I waited for price to rally higher. And I actually didn't put on a sell limit here because I just didn't like the price action. And after seeing price was trying to break above the area and we were showing signs of exhaustions, that's when I really stepped in and I took sort of an aggressive sell and it just melted all the way down. So it was a 5 hour trade here, some mini pullback, and a strong sell to the downside. Then that was unexpected. We'll just call it luck, as in, I was actually looking at the chart and I said, hey, I would like to look for a BNR. It's just a pullback trade and a continuation to the downside. And if you measure it from the high to the low, if you use a fib, you can actually see price is just sitting beautifully around the fib as well. And before I went to bed, price was, I did a recap on this already, but anyway, price was already down here. So I did not expect that my sell limit would actually get tapped. So around 2 o'clock, I think it was around 1:30 or 2 o'clock, I technically went to bed and I woke up around 4:30 or 5 a.m. I saw that, hey, how come I was up couple $1,000 here. So I woke up around 4:30 or 5. I closed the position before the exchange. So we just call it unexpected, right? So this was totally unexpected. And that's pretty much for all the yen setup this week. Only took two short. Did any of you try to look for a follow through short here? I did, but both of them end up closing for a really mini profit. Just call it a small half an hour. Did any of you catch the short here under 100.62? Because I know some of you actually shorted Aussie, and I think Horace, I'm not sure if Horace is here. Some of you also shorted around here. So we actually took a re-entry on Aussie and afterwards, as we noticed that market was again printing signs of exhaustions, and we believe that maybe market would do some sort of fake out again because market has been doing a lot of fake out in the past, just like this one. Then come back up again, show signs of exhaustions. Then if you drop down to the lower time frame, you can also see there was a TPF formation. It wasn't the most beautiful TPF formation, but market actually showed some sort of exhaustions here. And that's when I took an aggressive short. I told all of you as well. And when price came back, came under this 100.62, I scaled in. But unfortunately, my scaling got tapped out for BE. Then price eventually dropped a lot lower. So this spike here was caused by the unemployment rate. So this was irrelevant. After that, Aussie-Yen technically just go back into an uptrend. So Aussie-Yen wise, after doing the recap, right, I will still say for the current time being, it's better to put the yens back into the freezer, like what we always say, because buys are back in control. Actually, when I was doing my review, although I make, sometimes when you make money going short, there's still some kind of luck element because all of my exits were just on point. If you look at all of my exits, yeah, you see that, especially these two. If I did not close my position and if I choose to, let's say, just hold it all the way down to the swing low zone around 98.20, both of these would have been a loss. So sometimes, luck does play a role as well, and your exit matters a lot. So if I were to look at a review here, I would definitely say there was actually an opportunity to go long on Aussie-Yen this week, and that was something that I personally missed out. And let me just show all of you. So if we were to remove all of the SNR zones here, you can actually see after seeing price hold above this support zone, you see price printed a double bottom at 98.41, continue pushing higher, and there goes we formed higher low here and higher low here, and we continue pushing higher, right? And when price pulls back, it actually gave us a decent BNR opportunity at 100.04 for us to continue going long. So while I was doing my review, I also realized that I was too biased to the sell. Shorting here is okay. Shorting here was still okay. But this short here could have been prevented because market is already attempting to break above the high at 100.67. So when price was already attempting to break the high, I shouldn't actually be looking to short anymore. And in fact, I should be finding areas to continue going long. So that's pretty much it for the recap on Aussie-Yen. So this week, I'll be putting Aussie-Yen into the freezer. That means I will actually not be looking for any potential trade on the yens. For the time being, I still feel like the yen's a little bit messy. I just don't like the price action. So a recap on Aussie dollar. So Aussie dollar, we also took a short. If you look at the daily, why did we take a short? It was because price was really, really struggling to hold above this key resistance here. You see, we have a major, major resistance. We're talking about a multi-year resistance at 0.6892. So when price was attempting to break through the area, I identified that, hey, market is showing signs of exhaustion, rejection, rejection, failure, failure, and we just melted. And after that, we saw price also did a BNR, or you can also call it a TPF formation as well. So here we have the left shoulder, we have the head, and we also have the right shoulder. So after seeing multiple rejections, Peter, one of our member, also called the exact same setup as well. Then I told all of you, hey, I'm looking to short Aussie dollar and I'm expecting some short-term bearish pressure, sending price into this 0.6823 zone. But I decided to close out the position early around here because on that day we actually have the unemployment rate. So I decided to just close the position earlier, just call it a day. And Friday, I just did not look for any sort of re-entry. So coming this week, some of my main setups, just talk about some of the main setups here will be euro dollar. Although we are seeing some selling pressure on euro dollar, but I still really like the price action, as in I'm still standing from a buyer's perspective. I'm not someone who's very easily flipping my direction, especially if I look at the daily directions clear. Everything's pointing one direction, especially on the daily. We're just pushing higher. Even right now, if you see on Friday, we attempted to break under this swing low zone. We are still on a buyer's market until I see a solid closure under this zone. Maybe let's say we have another 2 days closing under this 1.0960 zone, then I'll officially call it on a seller's market. For now, I actually shared this exact scenario to all of you as well. I will still be looking for a potential long if I see price attempting for a break above 1.1008. So you can imagine on a 4-hour time frame, it will look like just a beautiful TPF formation. So we have a very defined swing low here, very significant. So if price right now, you see, we are already seeing some sort of rejection here. I actually didn't aggressively go long here because the selling pressure was just too aggressive. If I go long, there is what I always say is catching a falling knife without a glove, right? I just need to wait for break back above this 1.1004 in order for me to have a continuation trade back to the upside. And that's pretty much it for the setup on euro dollar. I believe it's really simple. It's really straightforward. I'm still expecting long-term buys. I'm not really being affected by this short-term selling pressure because to me, it's just a good way the price is giving me a discount because I've been trying to go long on all of the dollar pairs, but unfortunately timing was off. You know, a lot of times I want to go long, I'm waiting for price to pull back. It just doesn't seem like price is pulling back to my ideal POI. And that's why I can say for the past 2 to 3 months, I missed out a lot of long opportunities on the dollar pairs. And right now, as price is giving me a decent discount and I actually like it, why not give it a shot? So if price goes back above 1.1007 area, I'll be looking to go long on euro dollar. Second setup is pound Aussie. So pound Aussie, if all of you still remember, I've been calling shorts for such a long time. But very, very unfortunately, some of you even follow my setup. When I was going short on GA, I think it was right somewhere, I think it was somewhere around here, somewhere around here. I got stopped out by the spreads because I held it overnight and I got stopped out by spread just to see GA eventually push all the way into our TP. But right now, on the good side, Pound Aussie is giving us some decent discount. So I will be looking for some BNR setup, really simple BNR setup. If you look at the 16-hour chart, you can see GA, we're just on a clean downtrend and we are doing a retest of this 1.9302 resistance. So if I do see a rejection here, I'll be looking for a continuation to downside. So this setup, very likely it will happen tomorrow. But the problem is tomorrow is Aussie bank holiday. So I try to avoid trading the currency on the holiday because normally we just see a complete dead market. So it depends on all of you. It depends on the way you trade. I probably will step away from GA tomorrow and I'll come back on Tuesday. I believe tomorrow we might not see any sort of movement as well. So let's see if GA does eventually reject this area. Even if price pop up a little bit on the lower time frame, just don't immediately say, oh, you know, we're price is breaking above that 193. Are we supposed to flip back to long? No, it's SNR is a zone. It's not a specific level. So as long as price, I don't care if it comes up a little bit, as long as it eventually reacts to this area, I'll be looking for a potential short back to the downside. Right. So that's pretty much it for the two setups that I'm looking at this week. And let's break down gold. I saw Marius inside our chat group requested me to actually talk about gold. So gold on the 16-hour, what do you all see? I'm actually quite curious about all of your views on gold. How do you all think about gold? Would you go long? Would you not do anything? Do you think it will still go up? Do you think it will go down? What's all of your thought process on gold? So Ryan say, I feel like gold is super dangerous to explode anytime now. Yep, that's more of due to the Middle East war. Yep. Uh the current price action in gold is definitely just insane. What I can say is unprecedented. I've not seen anything like this before. Every time when I think, we are finally having some retracement, we're finally having some correction, we just continue pushing higher. So yeah, the price action on gold is just insane. How about the rest of you? And here comes another question. Would all of you trade gold right now? That's the main question. Let me see. No, right? All of you say no. Yeah, step away. Jordan say got lucky on it once, probably step away to avoid giving back. What do you mean by getting you got lucky once? Jasper say good waiting for CMI. Now we're still ranging. Ryan say the war news are not within the economic calendar. Gentle say gold is still bullish, but need to see the H4 retracement. Philip says stamp away. Young say like squeezing into a wedge, waiting for a big move. Vincent say I shorted after NFP as a range play. Yeah, just a lot of different perspective, right? And my only perspective on gold is just step away. That's my that's my simple answer to all of you. I definitely wouldn't try to trade this, you know. You can trade gold, but just know that if you're trying to go short on this, you're technically just trying to kill yourself. That's my very honest opinion on gold. You know, I see a lot of traders right now, they're trying to aggressively short gold. I just don't understand why. Did any of you try to short gold? Because I know some of you did it. I know some of you did it because I was going through some journal review. Jeff say anything can happen. Yeah, of course. Gap tail say kind of choppy sideways now. Jordan, I went long last week and walk him, so it spike. JC say still within a high based consolidation stage. Seems like bulls and bears are still quite indecisive. Correct. Whether long or short, keep defending his zone, but waiting for a bigger breakout. Let me be frank with all of you. My current intuition on gold is I believe we're about to see a major correction. That's my very honest intuition. But at the same time, there's no evidence for me to go short because obviously we are still pushing these all-time high. And if I were to go short right now, is like what I say, is catching falling knife. So it's difficult. And that's one of the reason why you have not seen me talking about gold for some time, purely just because there are few of you always ask me to break down gold. There's nothing to for me to break down. The market is just extremely parabolic, and we are still defending every single minor low. If you look at the price action here, every time we have a minor pullback, you know, this kind of support here is pretty minor, right? Minor support at 24.77. We just bounced and we just continue pushing higher. Then here we have a massive indecisive candle. And guess what? Massive sell-off, immediate recovery. And we continue pushing to the upside. And then right now we are also again respecting this minor low at 26.40. So no one really knows when will be the top. But rather, I would just suggest all of you just don't do anything. If you really think market will be experiencing a major correction, like what I'm feeling right now, I have a very strong intuition that gold's probably going to pull back into 2500 area. Why? I don't know. Based on my experience, based on my intuition, but I cannot pull the trigger because imagine if you were to short go, how many times do you have to lose? So what I can say is just pay attention to just say around this 2638 zone. If market try to break under some of these minor low, I will actually try to go aggressively short, not on a heavy size, of course, maybe on a 70%, um, 80% sizing on my personal account. And I'll try to see if I can build some long-term position. If I do see some price action like this, I will actually start building some short on my personal account, not funded. Funded is a little bit dangerous to do that, but on my personal, I'll try to do that and see if we do get into some correction because things is pretty expanded. Things is pretty expanded. It's just tough to go to try to trade any sort of mid reversion setup. But anyway, I believe when everyone's chasing buys, there's always opportunity that's presenting itself or presenting in the future. I'm just still waiting for right side of the V to go short because for me to go long, it just doesn't make sense. It's not within any of my pattern, any of my strategy to chase such a crazy move to the upside. I would much rather to wait for the right side of the V, like what I say. So Gentle say I prefer to see CPI push go down 200-300 pips to see any long setup from there. It depends on your perspective because imagine today you as a short-term trader, you see CPI sending gold 200-300 pips lower, and if you try to go long, you are long biased as well. You get what I'm trying to say, Gentle. So you have to gauge it and you just have to break down everything as well. Or I say gold price expanding the range, either by sellers long short position kept being hunted hard for going swing, but I will buy at this kind of lower time frame. What's your ideal discount price for Horace and Junto? Because most of you say that you're looking for some longs at a lower price. I'm trying to discuss gold with all of you because many of you trade gold, lots of you trade gold. And when I was going through the journal review, I noticed a lot of you are still trading gold and most of you are losing money. And I just don't understand. You see, when market is being messy like this, why not just step away? Um, yeah, I don't see anything interesting for now. Any other setups you would like me to discuss? Any pair or any question you would like to ask, or if there's anything going on with your personal trading you would like to share. Any question? Both UC. You mean dollar cat and dollar Swiss, is it? Why? Both UC means dollar cat and dollar Swiss. Okay. So let's talk about dollar cat. So dollar cat price action, we are definitely bearish. Yeah, it's definitely bearish. Why? Because the price action is very similar to Pound Aussie. If you look at the price action on Pound Aussie, we have a similar price action, a major break of structure. We're looking for a retest. So on UC, I would definitely still stick to sell. And like what I say, last week I told all of you I would not be going short there, although it was decent. I would much rather to wait for price to come back to 136. Guess what? I was correct. So price is coming back to this 136, and I'll be looking for a potential continuation short around 136 zone. That's it. So for dollar cat, that's not much to discuss. It's just on a seller's market until we see a break above the area. So Hang say funny, Gentle say can you look at GA? Yeah, I'll look at Pound Aussie. So Hang say funny thing for me is whenever a setup needs too much brain power, I just step away. Yeah, correct. What Hang what Hang say was actually correct. When today, if you look at the setup and you feel stressed and you feel like, hey, why does it look so difficult? High chance it's just not a setup. Makes sense, Hank? It's not even a setup. You create the setup yourself because you're trying to force any sort of position. Makes sense? If a setup present itself, it should be simple, it should be easy to read. So like the Aussie-Yen short I took, I feel like it's pretty easy. If you feel like today you're looking in front of the chart and you're trying to squeeze setup, everything's looking so complicated, very high chance you're just bottom trading. You are just over trading or you're bottom trading. So have a look at dollar Swiss. Dollar Swiss short term, we are a little mixed. I'll say on a daily, we are a little bit mixed, but definitely it's not something that I'll be looking to go short. A little bit messy, but I can definitely see there's a break of structure on the 4 hour. So if you're looking to trade dollar Swiss short term wise, yeah, you can see if price will come back to 0.8531 for a bounce, but just know that the quality of the setup is not going to be good. So if let's say you are looking for something like this as a short-term mean reversion trade, anticipating price to push back up, just know that you're going against this heavy flow. So market's very extremely bearish. You're essentially just going against the major flow, the major trend. But anyway, it's worth an attempt. Just risk less. All right, that's it. YY for dollar CAD dollar Swiss. For dollar Swiss, I will still say it's not the best setup. But for dollar CAD, if you're looking to go short, I would say is a decent price position. If you're going to go short around 136. So Jandol say look at GAW1 weekly time frame. Looks like it's creating a long wick. Yep, you can say that as well. But although I do study the weekly chart, but it's never my main concern. Makes sense, Janto, because we are more to a short-term trader. So sometimes when you as a short-term trader and you overly analyze the weekly time frame, it could create it could just signal false information because it's irrelevant. Makes sense, Janto? So I still much prefer looking at the daily or lower. That's just my personal preference. To me, weekly is a little bit too far, and as a short-term trader, it might feel a little bit irrelevant to my short-term setups. So if I see price breaking under a structure like this, so obvious we're doing a BNR, it's impossible that I don't take the sell just because the weekly looks like it has a wick. Because if I do that, I'm creating confusion psychologically between my system. So my system says signaling sell, but I go and look at the weekly and say it's looking like it's bouncing off the 50 EMA. So analysis paralysis. So Young asked for pound yen and euro yen. Is there a potential BNR? Temporarily, I would say Young is looking a little strong. BNR means you're looking to short, right? Is it? For long. Where's the BNR long? You mean break above this prior resistance? Do you mean? Not really a setup for me. You know what? Why Young, back to what I discussed earlier. I'm still personally on the sell side because of these major wave down. I'm still personally on the seller's side because I believe they're still in control. So if I were to go long here again, it's not that you cannot, but it's just not something that I'll personally take. All right. So I'll much prefer to just wait. And even if we go long there, it's a little in between of the range as well. It is a little odd in terms of price position because you don't have much area that serves as your reference point. Makes sense, Young? And go back to EJ. BNR, yeah, you can do it. But again, if I know that cells are in control and we are printing a resistance here around 163.85, I will much prefer continue going short. Because short term to mid term, sellers are in control. Make sense? Unless we really break through the resistance aggressively, you can try to go long. But for now, I'm still on the seller side. That's it for pound yen and euro yen. So why do I say the Dow's extremely bullish, nothing to trade. Goodbye. So it's difficult to trade. Why? When you look at a price action like that, normally I'll just turn off the chart. I don't even bother, once I have a glance at the chart and I see a price action like this on a 16-hour, immediately I'll just walk away from it. I'll just skip this chart. Why? Because there's nothing I can do. If you were to go long, how do you go long? If you were to go short, can you go short? You cannot. Aggressively go short means you are just predicting. But if you go long like this, just think about your price position. You're almost like you're taking risk but without really understanding what's the potential reward. Because will price continue to push forever? It won't. But can I, based on this, and I try to predict that we're going to reverse? I cannot either. And that's why most of the time when I see such a pro trend or a parabolic trend, I always tell all of you, hey, I might as well just step away because I just can't see anything. Because to me, I talk about this a lot of times. Trading decision, every trade that I take, they're like a business investment for whatsoever business that I do or whatever. Every single trading decision is the same thing as well. If I today put in $5,000 risk, the first question I will always ask myself, I don't care how beautiful the pattern is, if it's a cup and handle, if it's a turtle pattern or whatever, the risk reward potential has to justify itself. If I see the setup only has a one-to-one risk reward potential, because if let's say you were to go long here on the Dows, how do you set your stop loss? How do you set your TP? It's difficult. Turtle soup, Darren. Yeah. So trading for me is a business, and that's why I'm profitable because that's the way that I treat it. Every single position that I take, I just need to make sure they're going to make me money. If I win the bet, I need to make money. And that's something that not many traders care about. And that's why they're constantly losing money. So if I look at Dow's again, why nothing to trade. Unless we see a significant break, then I might look for some short term, you know, sell to the downside. But if price breaks the resistance, would I go long? I probably won't as well. I just won't. I just don't prefer to trade this. Any more questions on setting TP? So Ryan say, when you trade Asia last time, you set TP around 98.7, but last time Asia hit the price about 20 days 20 days ago. Sorry. Let me try to understand what you're saying. When you set your TP, when you trade Asia last time, you set TP around 98 point. You mean what do you mean? Sorry. 98.7. Yep. 98.7 was here. You mean my exit was at 98.7, was it? Yeah, my TP. You mean this week, right? I closed my position 98.7, right? Yep. Then you say last time AJ hit that price, it was about 20 days ago. You mean date range? Okay. Someone please explain what Ryan is trying to say. Oh my goodness. You mean daily range, is it? Do you mean ATR? Do you mean ATR? Are you trying to okay. Ryan boy. Oh my goodness. I thought it was my it was I thought it was my I thought it was my understanding problem, right? So okay. Okay. So we successfully stopped Ryan from opening his mic. Okay, let's continue. So I prepared to hold it for 20 days. No, Ryan, you just have to understand one simple thing, which is market can expand, market volatility can expand out of nowhere. So even if you see an ATR where previously price hit that ATR range, it was 20 days ago, It just you cannot compare it that way because there will be time where one day the volatility just spike. And ATR is based on an average daily range value. It could be for the past, it depends on the value, the setting you have. It could be it could be 14, it could be 20. Some people use 50. So if you look at the data here, the last time when price hit that daily range, it was 20 days ago. That data has been derived from 14 days before the 20 days. You get what do you get my point, Ryan? Do you get what I'm trying to say? So it's not so accurate. So I'm not so bothered about the ATR because market volatility on certain day they can just expand out of nowhere. It could be due to news. That's the most direct cause. It could be due to nothing. So when I take a position, I don't really try to picture, is this going to hit my TP within a day? Is this going to hit my TP within 20 days or not? It all depends on whether if the market volatility decides to just, like what I say, open up. If the volatility decides to expand or not, it's not up to me. We There's no way we can predict. Jeff say, oh, when you call the bank, yeah, call Hong Leong Bank, right? So Yaroslav say, haha. Got it right. So we can't really compare it that way because the ATR itself is inaccurate because it's also based on the average of you know that 14 days before the 20 days. So it's not so relevant as well. Um yeah, yen sometimes when it's crazy, look at the daily volume. When it goes crazy, when it expands, it can expand just like that, like a few hundred pips a day. And especially for the current environment, things is a little bit crazy. Make sense? Right? So yeah, it's not really my consideration. When I take the setup, I just let it run. I don't really care about it. Um Wait, so Gaptel, what's your Telegram name? Um I have to. What's your Telegram name again? Can tell. Okay. So, Heine, how did you scale to the volume you're currently trading? At the beginning, did you do through personal capital or leveraging prop firms? If you were to try to scale a small account without going full margin, LXG, yeah, how would you manage your risk? So what I did was I actually talked about this many, many times before you join. So for all of you may not know, all of you may welcome me as a new member. So basically what I did was at the beginning, when I first started trading, there's no such thing as Profim yet. And FTM was probably the only one. It was about 6 years ago. At that time, there's only personal account. So obviously, I didn't have the money. I have a couple $1,000s from my work, from my savings. So what I did is I go really high risk. And obviously, at the beginning, we all go through the boom and bust cycle. It was technically just gambling. But after I started to build some consistency, I actually built my consistency quite fast because I did some really intensive backtesting back then. I shared this a lot of times here as well. Um, and I managed to turn $3,000 to 120K. So before you say, oh, you have such a great performance, I'll still tell you one thing. It was extremely high risk. At that time, I was risking 10, 20% per trade. But if you were to ask me right now, can I do that? I cannot. If right now you ask me, can I flip 3,000 to 120K? I could, but I don't have that stress tolerance anymore. 3K to 100K, it was less than a year, less than a year. Everyone know that. I believe majority of the people know this story as well. So 3,000 to 120K. Then after that, I failed. I lost majority of the money. And the main reason why I climbed back again about 4 years ago, it was when I started utilizing FTMO. So, Leo, FTMO was when what was one of the main vehicle that helped me because when FTMO just released, FTMO actually released quite long ago, but they started getting popular about 4 years, 4 to 5 years ago, and that's when I was sort of the first batch trading FTMO, and I yeah basically made a few hundred thousands on FTMO. Then I even showed my invoice before. FTMO I lost it. Then after that, my forex fund came out. The previously my forex fund and FTMO they were side by side. They were sort of competing against each other, and I literally have all the receipts for my forex fund. Withdraw about probably 300,000 to 400,000 from my forex fund as well. So you can imagine just from prop firms how much I have made. Then I have also made money from different prop firms such as MP funds, um, Aqua Funded. All of you should know, right? Aqua Funded. I also made 100 or 150 or 200 from there within 2 months. And MP funds close to 100. Then True Forex Fund also over 6 figures, also over 6 figures. All of the invoice still here as well. All of the withdrawal receipts. So prop firm is one of the vehicles. Second thing is I don't waste money, if I should say. Every time, okay, I think I can open my video right now. Can all of you see me? Ah, finally, y'all can see me now. So so back to the question, Gaptel. So what happened was every time when I withdraw from prop firms, right? I actually did not accurately, calculate how much I've made from prop firms, but the only thing I know is either close to seven figure or it's already $1 million or beyond. I don't really measure it because on FTMO I made quite a few six figures there, but I actually lost all of the receipts. It was only until my Forex fund I started to download all the receipts and I keep it. And I know since my Forex fund, I made 700,000 plus from my Forex fund, True Forex fund, MP funds, Aqua funded, and just some prop firms here and there. So every time when I make money, I just reinvest into my personal capital. And when the way I trade, the way I manage my risk across prop firm and personal capital is a little bit different. Most traders they trade it more conservatively on their personal account. But for me, on my personal account, I actually have a higher risk. Why? Because on my personal account, there's no restriction. I'm allowed to do a lot of adjustment according to the market condition, according to how I feel on specific setup. There's a lot of flexibility. And that's why I always recommend all of you need to start accumulating your personal capital. Don't just fully rely on prop firm. Did I answer your question? Um, Leo, right? So technically just, yeah, it's the game of making money from prop firm, reinvest into your personal capital. And that's how, when both run side by side, eventually at one point, even my personal capital, all of you also know, beyond $1 million plus. But obviously, I don't put all of the $1 million into my personal capital, too much risk. So I normally just allocate, let's say, 200K on my personal capital, or sometimes at peak, I only put probably 500K in one account because you don't need to put. Let's say you got $5 million cash right now. You don't need to put like $3 million in your personal capital to make money because it's too much risk, on the table. What if you someday go crazy and you blew your $3 million? So yeah, that's basically it, how I did the whole thing for the past 6 years. But I'll still tell all of you one thing, which is, trading was my main financial vehicle. But outside of trading, I also did other things. These are things that I don't share too much, business or whatever. So yeah, right now here I am. So the way LXG essentially trade is just full margin. And if y'all watch my latest YouTube video, right, it is nearly impossible to do that because a lot of things just it doesn't make sense. Yeah. Did I answer your question, Leo? I think you're Leo, right? I mean, is it Leo or Gabriel? Your real name? Yeah, it's Leo, right? I remember I saw your. So if y'all were to ask me, we quite seldom have a chat on this. So if y'all were to ask me what's the best way to make money from trading, I'll always tell you, don't be too conservative. As in, although I'm not sure if I should share this because all the while I've been trying to be I've been trying to build that good teacher image in front of all of you because I just want this community to be a pure, sincere educational space. But for me personally, I'm quite a high risk trader. High risk doesn't mean I go all in on my on every single trade. But at times where I really feel like the opportunity is there, I build a lot of intuition on the way I read price, the way I read market opportunity, and obviously building the patience to wait for the right setup to appear. There will be time where certain setup, if it's really good, I don't mind to risk even 3 to 5% on that trade. But obviously it's on personal account, not on fund account. Because personal account is very hard to justify your risk. Because let's say if I have a $200,000 personal account right now on IC market, which is like my usual account, about $200,000. Most of you again also know as well. If I risk 5%, some traders might think you risk a lot. Like, why do you risk 5% on that trade? But I have personal, I have personal capital that's parked in my savings account, in my bank, that I haven't allocated into my broker. So it's hard to say it's risky because I could have let's say, put on $1 million into my personal account and I just take 1% risk. But I put only 200,000, I risk 5%. You all get it? You all get what I'm trying to say? It's the same thing. Yeah, it is technically it's the same thing. I'm just trying to put less money in my broker because I don't trust broker that much compared to my own bank. Yeah, I still prefer to put money in my bank instead of like put so much money into IC market. Because the max they cover you is probably 250K. If you go through their terms, they only insure you up to 250K of deposit. I say notice you trade quite aggressive lots with 200K, not as aggressive as LXG. He when I was making my yesterday's YouTube video, I actually went through his video and I saw he was on a 40K account and he traded 320 lots on dollar cat. I was like, whoa. I was like, oh my goodness. Even my wife, she was like, whoa, 320 lots on a 40K account with a 1 to 1,000 leverage. Is it even possible? Correct me if I'm wrong. My account is 1 to 1,000 as well. I don't think you can open 320 lots on a $40,000 account. I really want to try. Maybe I'll just deposit 40K or transfer 40K into my another account and let me try if I can open. It's insane because you need to know it's impossible that his broker has no, I'm not sure, spreads or whatever. Just the commission to open 320 lots is already insane. plus spreads. Yeah, I don't get it. From my personal experience for so many years, I don't think you can open up that kind of lot size with $40,000 account. And that's why his entire 100 to 1 million to me, it feels like a whole a fake thing. So Darren asked, how about trying to pass a new challenge account? Normally I risk about 1.5%, Darren. Um, and I think I also said this before. I think the longest I've ever, again, don't let this affect all of you, but the longest I've spent passing phase one is 5 days, which is 1 week. That's the longest. Most of the time, I pass phase one in 2 to 3 days, and I pass phase two normally in 1 day. Um, I'm not here to be like to create a wow factor, but that's the very honest truth. And the other day I was having a one-on-one call with YY, one of our members here. I think he just left. He just now said that he's a little busy. And when I was talking with him, he asked he has been spending. He has a problem here. He's been hey, Heng say so motivational. I'm putting 30% tomorrow. So when I was having a one-on-one call with YY, and he told me one thing. He spent about 2 months on his phase one account, and he's still at break even. And when I was scanning through his journal, I realized he has the habit of sizing down when he's on a drawdown, and when he make money, he just close the position too early, which is some of the common problems by trader. You know, never size down when you're in a drawdown unless you're overwhelmingly, you feel like you're overwhelmed by emotion. Obviously you should do that. You might as well don't trade. But when you size down on a drawdown, you are just killing your edge, because if today I'm sitting here and I experience 6 losses in a row, as long as I know all these 6 trades that are within my plan, I shouldn't size down. The moment you size down, you're essentially trying double or triple the effort to crawl back to even break even. So me, from probability standpoint, from a logical standpoint, it doesn't make sense. So I never size down when I'm in a drawdown, but when I'm in a drawdown, it actually builds me more confidence that I know the winner's about to come. Obviously, we don't know when. The other day we had a long conversation, me with Horace and also other members. We had a long conversation about this because they always feel like when you're in a drawdown, shouldn't you size down? When you're in a drawdown, if you size up, doesn't it look a little bit risky? But to me, if you know the numbers well, of course, numbers are not accurate, but if you know for the past so many years, your max drawdown is 6 to 7 trade, what's the likelihood of you losing 20 trades in a row this time? Very slim. We're talking about 10% chance or even lower. So when I'm in a drawdown, recently I went into 5 losses drawdown, right? And I know the win's about to come, and that's when I just be patient, and I know when a winner comes, I just go hard, which was the Aussie-Yen short, which was uh this Aussie-Yen short that made me about $40,000 plus across 3 accounts, funded funded 200K, personal 200K, another personal just 10K. So this, this Aussie short itself made me 40K plus, and I easily recovered all of the drawdowns in the past 1.5 months. So yeah, back to Darren, 1.5% risk on my challenge. Oh yeah, back to it. So the key to pass challenge properly, with a faster speed, is to ensure, um obviously we all know, take the highest quality setup. Second thing is, when you win, when you know that is a winner, please don't have the itchy hand or have the fear to close out your winner so early. When you have a winner, let's say you have an 8 or 10% profit target, right? Just press your winner and try to make sure you pass it within 1 to 2 trades. If you have the winner comes in, try to make sure you pass the whole thing. Because if you risk, let's say you risk 1%, not 1%. For me, I risk 1.5%, right? Let's say if I risk 1.5%, 3R, I'm already up 4.5%. If I were to scale in, when I see I have the right timing, I can easily pass the entire phase one in one trade. Make sense, Darren? So my trading style has always been trying to make sure when I'm taking a challenge, I avoid going into drawdown. And when I win, I try to make sure I pass it within that 1 to 2 trades. Because it just I've seen a lot of you, right? Let's say you go to 5% profit on your challenge phase one, and then you go into drawdown again, and then when you win, you cut it off for 1 or 2 R. You're just being fearful. You cut off your winner way too early, and you go back to positive few R. Then probability sequence, you go back into drawdown again, you go back into winner again. Then you just keep doing this back and forth. You're just killing your mental capital. So Vincent asked, what if on phase two? On phase two, normally I risk the same thing. Honestly, I risk the same thing because I'm essentially hunting the same setup. Jordan asked, Tianke is Jordan for some if you may not know. So Neil, do you trade the same way on fund and personal? Yeah, of course. On personal is even more aggressive because I have the flexibility to do whatever that I want. On personal, I can risk up to 3 to 5% per trade. Only the highest quality setup, of course, not the small one. So yeah, I hope this Zoom. I have another meeting coming up. I hope this 1 hour plus Zoom session help all of you, and also to Leo again. Welcome, Leo. He's one of our new members here. So yeah, hope all of you also learn something new here. So any more questions? If no question, we'll